Okay, so supposedly I'm live. We'll find out. And you're going to see me try to figure this out on the fly here. Good morning, everybody. Okay, so welcome to my first attempt to broadcast simultaneously on X and on YouTube. I'm not sure if this is working. If any of my BFFs are out there, let me know if this is working on YouTube or on X. Good morning. Okay, so somebody logged on somewhere from Twitter. Okay, great. All right. Without further ado, let's get started. I'm going to pull up my daily plan to read from it so that I'll have some structure because I'm pretty good at, I tend to be off the cuff, and I want to give you guys some structure so you can kind of follow along the thread and get something useful. Okay, so unless you're living in a cave somewhere, you probably know that we closed around 6,000 on Friday. The big gamma level, the big level of interest, the big technical level, the big round number, call it, slice and dice it any way you want. That was an important level to take over. Okay, so what we have coming up this week, just to kind of broaden out the context a little bit, we have the CPI coming up this week on Wednesday. That's sort of the next inflection point. Possibly, do we run? Do we pull back? Is there going to be something there for the Bulls and the Bears and for the Algos to get excited about? Or is it more of the same? I don't know. Your guess is as good as mine. Your crystal ball is as good as mine. What I do know is that while the expected move for there, that's the highest expected move for the week, it's nothing dramatic. It's nothing dramatic. So that's that. Okay, what else? So Ivy Peaks Wednesday, like I said. Um, Going forward, I put this in my weekend note, and I'm not going to spend too much time on this because I'm guessing most of us here are day traders, short-term scalpers, and that's what we want to know about. After the CPI on June, we have some catalysts coming up or some events coming up that may or may not, but may change the picture. Asterisk, uh, something in the back of your mind, back of my mind. Monday, according to whatever stuff I read by the gurus, um, June 16th, corporate buyback blackout window begins. So that liquidity, that automatic bid is being taken away somewhat. I don't know how much it is, but that's asterisk number one. Asterisk number two, and we'll talk about VIX a little later on in this. VIX expiration, VIXpiration, potato, is Tuesday the 17th is the last day to trade it. The settlement, the special opening quote, is Wednesday AM as normal. I'm sure we all know, and I'll just put this up just so you can at least have some kind of context for what we're looking at here. I guess I like to look at VIX on a line chart, and TA on VIX, I think most people agree is not the best way to analyze it. That's not what we're trying to do here. Um, VIX was up around 24, then 20 was kind of the new normal, and now after the most recent spike, we broke sub 20 and it's been 18. It's been all these different levels. And what has been defining these levels has basically been, to some extent, the options positioning. And we'll look at that later today, this morning, or later today if we have time. Or at some point, I plan to be doing more broadcasts where I look at things and hopefully they're of value to you. Basically, it's me thinking out loud, and if you want to join me in thinking out loud, you can. Um, but we have expiration on Wednesday. We also have the FOMC on Wednesday. So we have expiration, potential unclenched. We're kind of looks like we're heading to Sweet 16. Average VIX 16 is 1% daily move, et cetera, et cetera. And so, do we get there? What happens if we do? Does VIX unclench and go back? Do we have the summer doldrums? What Jem Carson calls the summer of George, and do we continue to lift? And I don't know, more will be revealed, like they say. But that's the asterisk. The other asterisk here, and that's why this coming week, Wednesday, FOMC, expiration, and we're going to look at this too later when we look at more detail on the SPX complex, which is my specialty and what I love to trade, so I trade every day. We have the big AM settlement coming this Friday, except because of Juneteenth, the AM settlement, the last trading day, is Wednesday. So just so we're clear here, the last trading day is Wednesday, but the settlement price is going to be Friday's open. So that just adds a little more fuzziness to the whole process if you're like me and we're trying to land a plane on the short runway of an aircraft carrier. And so there's that. So market closed Juneteenth, and then on Monday, June 30th, I believe it's Monday, I have to check to make sure I got the date right, we have the JP Morgan collar roll. Again, I'm going to pretend that everybody kind of knows what the JPM collar roll is, but just a quick explainer in case you don't. JP Morgan has three hedge funds, the largest of which I call the Papa Bears, so do a lot of other people. They have about 40,000 contracts in the quarterly expiring on June 30th. The 5905 is the strike there is short. Market makers are along that strike. That ends up being supportive as we move away. In theory, market makers get too long and they have to sell, all else being equal, pretending that nothing moves and that just time passes or spot moves a little bit. As we go back down, they have to buy, and this becomes one possible level where we go down to or as support. So what happens when the 5905 goes away? I'm willing to say 5900-ish is support until proven otherwise. 5850, there's reasons to say that. So that's just another question mark into June. Into the end of June, into July. Okay, let's get back to the more granular stuff. So what's going on today? As you can see, we're tickling the high set. I guess we overtook the Friday high a little bit. Can't really tell exactly. It doesn't really matter. Where was the Friday? We had the Friday high. Yeah, Friday we almost got to 60.20. That was a big gamma level that we just quite didn't get over. And I'm not here to teach you what gamma is. I'm assuming you have an idea. If not, there's plenty of good resources on there. I'll bring some special guests, quote unquote, on to talk about gamma that are better instructors than me, hopefully. And so here we are. And the way I look at it today, we have a few chop zones. And so I have these, what I call custom levels, which are really nothing more than, and the chart that I'm using here, this main chart is from Mentor Q, and I superimpose my own stuff, and I'm going to go into other services. I use lots of services. I use lots of stuff. I'm not a quant. I don't I can barely type. Um, and so the narrow chop zone, and Mancini has a similar level. And in a minute, I'm going to bring my buddy Punk on, my Robin to my Batman from a former life, who's going to talk a little bit about the Mancini ES levels and how they correspond somewhat with the gamma levels or where they do, giving us extra confidence. So 5095, 5595 on SPX would be the bottom of a very bullish chop zone, and heading up a little below this 60-20 top of the chop zone. I like to define a chop zone within which we go back and forth. And then if we're bullish, if we get on top of the chop zone, which we easily could, then we head upwards. And I'm going to look more granularly, show you where I get these levels in a minute, the strength of the levels. Right now, these are just lines without really demarcating strength. Taking us up to the top of this 60-40, 60-45 level, which is where the IC whale is. If you guys don't know who the IC whale is, I'm going to introduce you to him briefly today. Good morning, everybody. JP Morrow, yes, is Monday the 30th. So the IC whale, who is scaled down a little, has roughly 3,000-ish contracts, doesn't really matter, of an iron condor sold at 60-40-45 on top and 60-55-50 on the bottom. So those should mark the extreme of the range. They tend to. Sometimes they break for him when he does it. He doubles up. It's a martingale stimulation. He doubles up until he wins or goes broke. So far, he hasn't gone broke. He's had as much as, I think, 60,000 contracts there. And it looks like he's made his size smaller to give him more room to double up. And so I would be expecting this to hold down here, 59.50, 55. I don't know that this is, excuse me, a great scalping day. So within the chop zone, 56.85 to 60.20, I might look for long entries heading this way or short entries heading that way, but that's not my pitch. I'm an iron condor trader. I like to sell premium and then I'll scalp in between there. Now, if we have the breakouts, we have scalps up to the top of certain levels. We have scalps down. The downward scalp is actually a higher conviction because there's more of a void if we get down there below this 75 level. And we're going to look at all that. I'll get my presentation style a little tighter in a minute. I'm going to look at a quick iron condor, and then I'm going to bring Punk the Cowboy on, and if I don't see any of my other buddies here, so and then I'll go back to what I'm doing. So iron condor, okay. So I'm going to look at it briefly here, then we're going to look at options depth, then we're going to go a little more granularly. So I'm going to go to open interest here. The reason I don't really trade on Tasty much, I trade on Thinkorswim, but Tasty, the platform, just works more smoothly. So here we have the IC Whales put spreads from his iron condor. They were about a 20 delta when he sold them. They're a 12 delta now. He sold this trade for about, you'll see the trade in a minute, he sold it for about $2. The put side is 45 cents, so he would have been able to close it. Now, why is this only 3,700 short and 59.50 long? Wait, that's not a put credit spread. There's too many there. Well, he's not the only person on the planet that trades 59.50. Nice big round number, so there's going to be more there. So there's extra oomph there. There's extra influence there. There's a draw your line thicker at 59.50, and then we'll look at options depths and see what kind of line we're going to draw. 75 round number, but we're above that. And now his call spread, he's up here pretty much by himself. Now, again, there's other people up there. There's the call spread. So that's 140, 135. He sold that for about $2. In theory, if we opened here, he could close it out at the open, make 60 cents times 3,000 contracts, 60 bucks times 3,000, call it a day. But that's not how he rolls. That is, however, how I roll. I missed it on Friday, but when I see him do it, um, when I see him doing it, I'll often, so what I would have done, then I'll go into a trade, woulda, coulda, shoulda. What I probably would have done would have been gotten away from the 60-50 round number. I don't like round numbers. Would have sold something up here, would have probably gotten, I looked at the time, would have probably gotten, I'm going to say 80 cents or something like that for the calls. Would have sold below the 50 for the puts. I was playing with the trade right after it went through. It was too late for me to put it in. It was already past 4:15. It was about a buck 35 ish for the trade I was looking at. And now it would be, I think it might have been looking. It would be about the same because of the calls, I'm guessing. I really don't remember what the trade was, so I'm not going to lie. What I do is I put them in, buy the close 50% and take my money. So let's forget that. Let's look at today. So first thing I want to do, I like to sell far away from the action. I might later on in the day go in for an opportunistic scalp, sell something like this even, and buy it back, or something like this even at the money or near the money, and buy it back at 50% real quick, scalp that way. But that's not what, the beginning I like to set up what I call my wish trades. Above 50 looks good to me. I don't mind 15 wide, that's 90 cents. That's even better, 50 cents here for that. I'm putting that in now. For me, not investment advice. Don't get crazy. Don't call your lawyers. Um, Putting in a one lot. I'm leaving it live. I'm not worried about managing it if it moves against me. I got plenty of time. On the bottom, I definitely want to be away from this 50. And so let's see what 45.35 gives me, 65 cents. Get a little further away from the danger, 55 on the bottom. That looks good to me. Okay, something like that. So I put them in individually. This is me. You're just watching me do my morning shtick like I used to do with Robin every day when he was an iron condo soldier before he sold out to the dark side and started trading futures. And then then I would do this. I'll put in one as an IC also. And by the time we open, I'll be recalibrating this a million times. Okay, Punk, I'm going to put you on the stage now. Introduce yourself and make some comments. Good morning, Victoria. Good morning, everybody. Yeah, the whale strikes. Thank you, Market Literate, for putting the trades in on YouTube for folks to see. Look at the comments on YouTube. Some of my buddies here are kind of helping out, doing things in there. Oh yeah, I'm supposed to say like, subscribe, all that stuff, and throw my subscribe link in the YouTube. So I'm going to do that. You want to share your screen, or you don't really have that, don't know how to do that yet with this platform?
Hi, everybody. Can everybody hear me?
I can't hear you for some reason. I don't know. It's weird. Hold on.
You?
Try again.
Okay. Can people?
Yeah, I can hear you.
Okay. Hi, everybody. So, my name is Punk, and an animal that starts with a P is a panda, I guess, to introduce myself. So, just a quick recap. I used to sell credit spread, so everything you just saw, but Doc taught me, obviously, but I'm going to talk about something a bit different. Doc, I'm going to send you the link for the Mancini chart on our server. You can feel free to share that. Okay, so what I do is very different. Doc is going to drop a link because I can't seem to be able to. But I I don't know how many of you have heard of Mancini, which is basically a day trader on ES. So what he does is something very simple, but it's a bit more nuanced when you actually get into it. Is we look for a special pattern on the chart to trigger long. We're long only traders in this system. So what that means is right now, for example, I'm just sidelined because I'm waiting for a sell. And the whole approach in ES scalping is that 90% of the moves don't follow through, right? You've seen it. If you're a bit in the market, you know what I'm talking about. So you'll go into a long or a short and it'll reverse back on you. There's no follow through and it's virtually impossible to basically predict where price will go. So this approach is doing something different. It's not saying where price will go. It's saying if X happens, we can at least expect Y. So we bank on those movements. So for example, if said X support holds, we can at least get a move to Y. Or even better yet, if we get the pattern that we like, that I'm going to talk about in a second, we can expect something a bit like fireworks. So let me get to the pattern I'm talking about. We call it the FBD, which is the failed breakdown. Now, what is the failed breakdown? The failed breakdown is basically, excuse me, the failed breakdown, sorry about that. The failed breakdown is basically a pattern where price will sell, 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 sell. And at some point, we want confirmation that we're done selling and we're going up, right? We don't want to be catching the knife. So how do you know?
Let me jump out there for a second. I think I put the Mancini chart up on the screen. Hold on, I guess I have to move it.
Let me see if I can see it on my end. I'm not seeing anything on the chat. Maybe it's not. Maybe I need to download a StreamYard app. I'll do that later, but I'll take it. It's a new platform for me. So the idea being is that I'm sure as traders, we all got burned from trying to catch the knife, right? This has to bounce here. This has to support, et cetera, et cetera. We've all been through that pain. That pattern does something else. It says, once you see this pattern, this means that we had not only enough selling, but we can also see institutional accumulation at this point where it's safe to go long. How? The trick is once, and this is why it's called the failed breakdown, is that once price sets a low that we can call a quality low, we'll go into the details later, the market maker, the institutions will then say, okay, that's enough selling. We want to go up. So how do we go up? We trap shorters. We need that liquidity. So they'll choose a low they like. They will flush that low. We'll go into the details of by how many and how long it takes later. Once that low has been flushed and then recovered, this is why we call it a failed breakdown. It has failed to break down. Then this is the pattern that we're looking for that will say, okay, we're going up. Why? We got that low. We trapped everybody. We got that liquidity, stop hunt, whatever you want to call it. I'm sure you've all seen that in your trading careers. And then we go up. So basically what I do is very just that. I just wait for the FBD to manifest on the chart on different time frames, but mostly, of course, day trading, like Doc. And that's my signal to go in. Now, what happens then, that's half the job. Now, as I said earlier, is that 90% of the moves don't follow through. So what does that mean in what I just said? It means that if we see that pattern, we got a failed breakdown, and we can at least get a level-to-level move, which means that if I see that pattern, I can at least long one level up. So what we do in this approach is we long when we see the FBD, and then one or two levels up, depending on the action, and this is nuanced at this point, we take profit on at least 75% of the position. Now, and then it gets into personal style, whatever. So that means that even when price stalls or reverses or completely screws you over, makes new lows, you've already banked the profit, and the rest of the trend you're trying to catch is done in runners. So let's say, for example, you did 100 ES contracts. On your first level up, you close 75. So that's profit booked already, and then you let the rest run, and the ideal being...
Okay. I don't want to make this a course in money management and all that. I just wanted to point out that we also have some people that do some scalping on a more traditional fail
Yes.
breakdown, scalping, share sizing method. And what I
Yeah.
wanted to
So
point
just to
out,
finish up with
and
the levels,
Punk
oh,
is knows where the Mancini levels are like the back of his hand, where
yes.
the Mancini levels are compared to the gamma levels. And
Yeah.
so
So
I'm going to pull up options depth.
yeah, so just to recap is I give the Mancini chart that I do every day to Doc, and he then cross-references it with the gamma you've been working with. And we often see confluence, of course, so that makes us feel good and it makes sense. And it's just, as Doc says, different ways to skin the cat, right? So, for example, I'm looking, if you feel free to use my Mancini chart, and as I said, I'm sidelined here because I'm waiting for a sell for the FBD, blah, blah, blah. But you'll see that
I'll figure out how to share your chart later, tech wise.
yeah.
So thanks. I'll get your chart in the thing here, and then we can, we'll refine this process as we go along. Okay, so here's the gamma chart. Here's the main thing that I'm going to use. So this is going to show the strength of the levels. Market makers are long these calls, short these calls. This is net. Once it's in the market maker's book, according to Valsigs, most of you guys probably know him. Follow him, Vol Signals on Twitter. I've taken his mentorship classes, his VIP, whatever he has, I take. It's worth every penny of it and every word that he says. He's a former market maker. He did it for a living, and he trained market makers. So um, that said, we have all that matters right now is a net. Doesn't matter if they're long, they're short. Customers long put, short call. It's net delta, net exposure, and their hedging response. So and right now I'm looking. We're about 60-10, so we're about here. Now I don't know if I mentioned in my roadmap, but because I can't give every little nuance, although I do it live when we talk about it, either in screen share amongst ourselves. I have my buddy Ivan here. Some of the other guys that I trade with will do this as sort of not publicly broadcast. Um, from 6,000 to 60, 10, 20, right in here. Market maker short, that's a potential magnet. We have this little void here, which we kind of were stuck in. Okay, so we have a pretty clear path up to here. I'm sure Mancini has a line here. I'm willing to bet he's got a line here within a couple pennies. And then we stall. Hey, how you doing? Then we stall right around here somewhere. And 2025 round number. Always got to watch those round numbers. 30 market maker long strikes stalling here. And so let's just say we end up opening around here. We have these two areas to bounce between 6,000 and 60-30. The bottom of the tight drop zone that I talked about was 95 in here. Once we get into this area, we have these. Market maker has to short as we go up. Market maker has to buy as we go down. This magnet pulls it down. So we have this mess over here. Now we have these long calls and these long calls up here. And now that's going to depend on what the deltas are. If we have some 20 deltas, some volume, and some buyers up here at 50, which round number we probably will, and if there's demand and the IV goes up and this sort of the strength of this level decreases somewhat because of the net deltas up there, we could overrun it. If we overran it, then we have this ladder up, these long calls, customer long market maker shorts that could pull us up. Then this becomes a bound zone. Got to fix the volume. Can barely hear you. I guess it sounds like you're. Okay. Is this any better? Can you hear me? Can you hear me? Yes. I don't know. I'm gonna maybe I move my boom mic a little bit. Is that any better? Somebody let me know out there. It sounds good. Thank you. Okay. Yeah, the boom mic was further away from my mouth. Thank you. Um, let's talk about to the downside. So if 6,000, which a week ago was a crazy number, to the upside breaks, and I mentioned that 95, we have this 60, this pivot point, this inflection. It's also a TA number. I'm not going to go back and forth between the chart because I got a lot I'm trying to cover in a short period of time. Well, actually, I will. What the hell? The 6075, just price action 101. We were kind of failing up in here until we kind of broke it, came back, and then we took it. So this level, where is it? Over here. Here it is. Was a Mancini level, is a breakdown level. There was a lot of options interest there at 75 until we finally got through it. So there's a lot of reasons why I'm looking at that level to the downside. If this level breaks, 80-75 magnet, we got the support from the sold puts, but then we have the magnet here, and below that, as Paul Duncan from the Gamma Egg says, don't torture the data. There's nothing here. One of my mentors. There's nothing here to stop us. Don't think we get there at all. But a Trump tweet, a tariff tantrum, a missile going off in Iran. A bond market sell-off. There's a lot of things that can suddenly change the picture. And that's basically what I'm seeing today. So today looks to me so far like a good vol selling day. Um, who else do we have here? In the future, Ivan, if you want to come on and talk, I'd love to have you. Ivan's a great trader, great scalper. He's got great instincts. I don't know how he does it. He's got that gut, that scalper's gut. I think it's because he's a New Yorker. Okay, so now I wanted to talk about VIX. And the best way to talk about VIX, I think, I'm going to use I use a lot of different tools. I like all of them for different things. Maybe some of the people can get pissed off that I show this guy's stuff and that guy's stuff, or maybe they'll be happy that I show their stuff because I use everything. And that's just the way it is. I'll put links and disclaimers in, whatever I got to do to make it kosher. Okay, so here we are. Here's VIX expiration. I just like this because it's nice and clean and I can see stuff. Sometimes I use bar charts to see it. So here we are. Here's VIX expiration. So let's see what we got here. Spot is over here. So COTMP is a Gamma Egg secret source name. This is where the puts go in the money. Right at this 17 level. And if they go in the money, in theory, they're trapped. And you see we have 16, the biggest strike on the board. So do these puts decay and does it go up? Do we get trapped in here? But from a gamma point of view, the 18 to 16, this here is where we're trapped. Here would be the bullish zone, so to speak, which if you're a bull, you don't want to see us get here. Over this 19 level, this stuff flips. But that's not really what the main thing I want to show you. I think we're trapped under 18. We might skin our knees above it, especially going into the numbers on Wednesday. What I really want to look at, and I'm doing this myself for the first time, not for the first time, for the first time today, is look at what's going on out into July. So once we have expiration, what am I looking at for July? And so we have this transition at 20. So if we get above 20, things could get nasty. Okay, makes sense. If we start going up, and market makers have to start hedging their exposure at 20, at Oh, 18. At 18, those are puts. So if those puts go out of the money, they lose their deltas. Market makers who guess, let's say, to keep it simple, are short VIX futures have to buy back their shorts. We start going up, get attracted to 19, OMG 20. Wow, and then we get a whole different regime shift. I'm not saying that's going to happen. I'm just if thenning in the back of my mind. Remember earlier I spoke about a possible unclench. So if we unclench, this is what I'm going to keep my eye on. Whether I keep my eye on it here, if you don't have that, you can keep your eye on it. Where is it? Let me. I gotta find that. I'm not the most organized cat in the world, so you get to see my disorganization here. Maybe here. Okay. No, yeah. No, that's not it. I don't know where I have it. I'll just go over here somewhere. Good enough. Okay. I'm just going to go over here and do bar charts. You can also look at it on bar charts. Hopefully I'm logged in. So on bar charts, whatever tab I'm on, options prices, I guess I was looking at September. This is probably on Friday. I just go over here to bar charts, type in the symbol VIX, which I had in here. Open interest for the 18th, 20. That's where all the calls are. 19, volume. I don't know what they're doing there, but they're doing something. Open interest on the put side. 16, possible target. Trapped under these puts. And so I'm just kind of telling you guys what I look at, how you do it. I like brainstorming with people. I think well out loud. I think well with friends. I work better collaboratively. That's just how I'm wired. 20 is, I guess we're herd animals. I work well with the herd. So 17 and 20. So 17. Ooh, we get over 17. We're there now. We got this run up to 20. I don't know if this is somebody bought debit spreads. Doesn't really matter. Now we see where the danger zones are. And that's basically what I'm looking at today. Um, so I'm not even sure what the hell chart this was that I had here, but that's okay. I tend to have 15 open tabs on 8 different instances of whatever, and I'm not sure where I am at every given moment. And I look around down here and try and find myself. I'm a baby boomer. I don't know how to use most of this stuff. Okay, so where was I? I guess I was over here on options depth. I was here. Okay. Now let's look at charm. Okay, so here on options depth, I like this toy a lot. You can do different modules or whatever they call these squares. Um, and so I like to put the calls. Now here's customers' position. So customers are short these strikes. I want to see where the action is. I want to see what people are buying or selling. Customers are short these. So throughout the day, this is going to change. It's going to get updated. On Friday, I think it was, some of you that are in the weeds with me, remember the 58.90 puts were bought at around in the afternoon. We were trapped below it. They closed, and then up we went. I don't know how many of you were watching it. I'm pretty sure some of my other guys that watched the stuff like Hawk were watching it. All right, now let's go to charm. So charm is decay. Gamma is dependent on spot and time. If spot or price moves up or down towards a level, gamma gets stronger and shorter. Gets weaker or stronger depending where we are. Charm is going to pass no matter what. Time will pass, guaranteed. These options will decay, guaranteed. They will change to eventually, at the end of the day, either a 0 delta or a 1 delta. They're going to be either in the money or out of the money. And that's why we get some of these seemingly crazy moves at the end of the day. So looking at it now, what we're seeing is that 6,000 level. If we're below it, that's suppressive. All this will decay to a 0 delta. All this up here is going to decay up to a 1 delta, depending where we are, of course. So here's where we are now. Here's where the action is. Here's the 60-40, where the market makers are long delta. That's going to decay to a 0. They're going to, and here's where the market, and here's where the longs are. So here's one zone where we could pin 60-10, 600 short, or below here. And then we look at this during the day, or I do, to see what happens. I'm not trying to pick the pin from here, but gun to my head, I would say something in here, 25. What I might do, what I tend to do, not investment advice, blah blah, is if we're up here, a cheap lotto fly targeting 6,000 as a center strike, maybe either broken wing or equal with, or however I might want to play with it. And then sometimes I leave them on, sometimes I knit other pieces to them. And that's stuff that we talk about in the chat for the paid subscribers. I also do it wherever. I do it publicly on social media, you know, and people, exchange ideas. And that's basically it. Any comments? Anybody want to say anything? If not, I'm going to get to Tesla. Look at that, you guys. You made me forget Tesla. So I posted a little Tesla trading plan thing, and I guess kind of wrote it up looking at the gamma levels kind of quickly. I didn't like microanalyze it. And so let me pull that up. Let me just pull up mental Q. And in the Tesla thing I did in Substack, I put a link to his stuff. I have a link to options depth stuff. I got links to everybody's stuff. This is stuff that I use. I don't care about the $6 I might get if you use my affiliate link. I care about you getting the discount, and I care about supporting the people whose tools I like and who help me. It takes a village, we're all part of one big tribe trying to make a living here. Okay, so we're down at 290. We close at 95, so that's not a great look already. Let me pull up the plan that I had. I have it on the other computer on the laptop, and let's see what I could see. How do I find it? I'm not great at finding stuff. Oh, that's how I find it on Twitter. Okay, there you go, because I put it on Twitter. So it's on X somewhere. It should be the last post I did, I think. Oh, and you saw a picture of me. I thought, oh, there we are. Oh, look at that. Isn't that cute? There's my goats, and there's a Tesla thing. Okay. I'm going to click the Tesla link on my Twitter and look at the trading plan. So, okay, we all know the macro context. We had the food fight between the richest man in the world, the most powerful man in the world. 300 is a key level. There's tons of puts there. They're buried under it. We snuck our heads above it on Friday, and now we're stuck below it. If we can get above 300, this is more intraday short-term scalping. We could see it start to move up to this, toward this next level. Let me just see something here. Mentor Q has intraday levels, and they also have end of day levels. Intraday level is going to be a little more granular for the scalping levels, and takes us to here. So if we can get over here, one scalp. Right now, it's not a great short in my mind because we're kind of already down near the bottom of this Um, this might be a good bullish setup if this breakdown fails, if we fail to break this put level. Now, what I'm looking at for Tesla being kind of a bit of a contrarian and not liking to spend money, looking for trades on the discount rank. And I already did this the other day. I sold some Tesla naked puts. I'm willing to own it into July. Okay. This looks like something I was messing with. I didn't actually do it. So I sold like the 225 naked puts or something to somewhere down here. You give it to me at this price, I'll own it and sell calls, wheel it, or decide what to do with it. But let's just say not everybody's got my risk tolerance and whatever. What I would do, there's a few things I could do. Looking at gambler, sell a put spread. Maybe you want to go closer. Where did we break down? I think we broke down to 270 something was like the big Tesla disaster day. So go down here, maybe get, go over here even, something like that. And then try and get a fly. We saw that 10 level was a level that we could get up to, or the 15. Maybe buy a 15 or a 10 even. Sell 225s to make it a fly. We have a 15 wide fly here, a 10 wide fly here. I guess so we don't get our heads taken off. Oh, I got too many legs. So I'd have to do it as separate, as two separate trades. Rather, I would do something like that. I would sell the put spread and I'll look to do some kind of a fly up here. I might do a June fly and sell the July puts, or even sell the August puts, something like that. If you guys have ideas, let me know. Or you can just share size and scalp it like a normal person. And that's it for now. I'm going to end the stream. Comments, like, reshare, all that good stuff. Thanks a lot for watching. Hope this was of value.